StockMentor.com studios here in the Black Hills of South Dakota. I'm your stock mentor, Brian Johnson, and time for our first week's update. Okay, guys, it's Tuesday. And we had a gap down on Monday, and then a bunch of sideways consolidation, which was kind of useless from a trading perspective. But today we had kind of a decent move. Let me just show you what we've seen here over the past while since May. Okay, the whole sell in May, go away thing is really playing itself out well. Now we're not done with the month yet. We still got some time to go. However, I got to tell you, the bears look good. They look really good down in here. I really don't see a whole lot that's got me mega bullish on this market right now. Take a look at what we've seen. Down into here, little tiny bounce. Okay, so start at the top. Down, little tiny bounce. Down, little tiny bounce. Down, sideways consolidation. We didn't even get this nice push up or nothing. Okay, sideways consolidation, straight down again. That was Monday. Sideways consolidation, down again. The bears are running the show right now, and they look very, very, very good. Even right now, I know we're extended. Yes, we're low and everything's oversold and we're supposed to bounce, but I don't care. It is what it is. The chart just is what it is, and the chart is bearish. So we have now broke that 12.7. We talked about 12.7 and 13.3, the 600-point range. Guess what? It's broken now. First close of it today. We got to close below that 12.7 mark. Might have had one yesterday. Pretty close anyway. Point is, we're back below, or we are below the 12.700 mark now. Things still look bearish, too. I don't see any major place to be looking for a big bounce. I think when it happens, we'll just know. So don't get too far ahead of yourself. Don't get out in front of this thing and try to catch a falling knife. As you can see, it has been nothing but straight down for the bears, and the volume continues to come in. Today we had good volume again, and the bears are really pushing this thing. The bulls have zero interest at this point in driving things up again. Apparently investors don't think things are a good deal down here, so we'll see at what point they decide they are a good deal. But it isn't now, and it might not be tomorrow, and it might not be this week. So don't expect anything major. Just wait for these breaks to happen. The places I think I would most suggest you watch, 12.9, back up in this area here. If we can get back up into here, okay, now we're talking about something. Okay, now we've got an opportunity. Don't get too far ahead of this. Don't think you have to call the last bottom penny, because more than likely, you're going to expect this thing to bounce at 12.6, and if it doesn't, it'll run to 12.4, and all of a sudden you're buried 200 points to the downside. Don't be that guy. Wait, and maybe wait 100 to 200 points to the upside and get in when you know it's a much more manageable trade, when it does look more bullish, when we are looking when we are getting stronger strength volume-wise to the upside. The point is, guys, quick mentoring right here, guys. The point is not to call the top. It's not to call the bottom. If you can, fantastic-orifico for you, but it's not necessary to make money in the markets. This is what you want to do. You want to take a chunk out of the middle. I don't have to call the top. I don't have to call the bottom. I just want to call this chunk and maybe this chunk. And if I can pull that out of the middle, yay, I can do very well at trading if I can just do that. So don't get caught in trying to call this very, very bottom or the very, very tops. That's a great way to blow up your account, guys. So just a quick word of, reference for you guys. I don't want you washing out of the markets. And one of the quickest ways to do it is trying to call tops, trying to call bottoms. So if you're doing that, stop it. Don't do that. You're going to get killed. Wait until it's, there's a lot more stability and that you're like, okay, yeah, that was a bounce. That is the bounce we're looking for. That was pretty strong there. Then maybe we can talk more about it. So just don't get ahead of yourself. And there you go. Now I'll move on. Off my soapbox. Looking for this thing back below 12.6. That would be your next mark. I know it's low, blah, blah, blah. I don't care. 12.6 is your next opportunity. I think that's your best shot at trying to pull a little bit more out of it. I really like, I'll show you here on the daily. Oops. That was the daily. I don't have the next bigger one back. I've got, let's see, I've got you guys on a 4-month. That's why. Hold on just. Much better. Let's widen that thing out. Okay, so here's this 12.7 area that I've been talking about. Really like this 12.5 mark. So back below 12.6, check that 12.5. That would be my next lower area. Even 12.4 would be good strong levels as well. Ultimately, to be honest, 200, okay, you bet. Certainly wouldn't be yeah, I certainly wouldn't be adverse to thinking that we could stretch it down into here, but it might be kind of a slow grind sideways, whatever it might be. But check your 12.6, below that 12.5, then 12.4. That'll be your marks on the diamonds. NASDAQ 60-minute 1, 2, 3, or maybe working on that 5. So still the same type of scenario that we're seeing in all the other markets. Down, both down, bear flag, down, low base, down. It's just down, and strong pressure by the bears. Back above 2650. I've been talking about that for a while. Still my more favorite place to look for a long position here in the NASDAQ. Usually when things get going, the NASDAQ gets going, and it can run and run hard. I love the NASDAQ to the upside. But look at the wick that we got on the daily today. We were up almost 1% today. And by the end of the day, nada. We got nothing out of it. We were down 0.4%. That's huge. So we ran a long ways. So don't get caught in these little moves to the upside. As I said before, wait for the more major breaks. 2650, definitely the one I'm watching on the NASDAQ right now. 2560-ish, somewhere down in here, and 2550 will be my next lower levels if you guys want to try something to the short side on the NASDAQ. But as you can see, big push to the upside, met by nothing but selling when it got back up there. Now it's not about, hey, this is a great chance to buy, and buy the dip, buy the dip, buy the dip. It's just the opposite. Now it's just sell the run, sell the run, sell the run. Every time it pops up, they're selling it off. So, and I still like what I'm seeing from the bears on every indice on all of the time frames. It just looks really strong. Here we are below the 20 week moving average. Talked about it last week, how we had that nice tap off of it. Fully expected a drop, or at least another tag of it today, or this week, sorry. Another tag of it this week, and or a drop below it. Perfect. We're back below it. Keep in mind, it is options expiration week. We could get some extra volatility in the markets coming into the middle to end of the week. I'm usually not so spooked around Monday, Tuesday time frame, but now that we get into Wednesday, Thursday, things can kind of take their own little turn. The bearded one speaks tomorrow, so even though the markets are growing very weary of Bernanke and his speeches, he does talk tomorrow, and that could be a market mover. Don't be surprised if we move sideways for a majority of the morning until he talks right around 2 o'clock Eastern. So keep that in mind. That could be a real market mover for things tomorrow as well. 25.50 to the short side, as I've been giving you But from a weekly perspective, even these bigger time frames breaking down, down. So getting into these lower levels, 25.50, loving that for a short. SPX 60-minute, following this line very nicely right now, and containing drop to the downside. Sit here. This is you can look at that as 100 different formations. We'll just call it a bear flag, low base, whatever. Drop to the downside, another consolidation, and another drop there. Still like the bear side. Every time there's some sort of a pop to the upside, it's met with nothing but selling. And it's been lather, rinse, repeat for the bears lately. So SPX has been no different. 1365, that's the more major spot to watch to the upside. 1340 was the trade to the short side. That one worked out very nicely. We're down 10 points on that, or I should say up 10 points on that, as the market is down 10 points from that 1340 short opportunity. Back below 1330, I'm looking at 1320. That would be my first best guess at the next heavier line of support. Looking at the daily, you can see that puts us right back into this area right around in here. I also love the 1300, and even, I don't know, dare I say, the 200-day moving average as well. Way down here at the 1280-ish mark. Having broken the channel, having broken 1340, having broken potentially the bear's back, you can see that we definitely are into some sort of a pullback slash new wave down slash major drop slash who knows what it is yet. Just don't get ahead of yourself. Just remember, I'm still more bearish than anything down in here. The bears look so good. Everything. The volume's not spectacular, but I'll tell you what, it's more than adequate for this continuous slide to the downside. the bulls cannot find a bottom. They just cannot find a bottom to this market right here. Here's the VIX. What do I like to see? Yes, back above 20 and holding above 20. We've done it not once but twice. Love what I'm seeing from this thing. Still like it more. I still expect it, actually. I still expect this thing to spike more, which means a further drop in the markets. It just looks that way. Weekly, same thing. We're back above the 20. Be very interesting to see if we actually get our first close above the 20 on a weekly basis this week. We had one way back here, and it only lasted a week, and now it's been forever since we've seen a close above the 20 mark from a weekly perspective. This could be that week. Watch that very closely on Friday. FAS bleeds its way down. I'm going to show you the daily here and give you your entries. If you like this FAS stuff, the financials are the ones that continue to hold us back. I know I've talked about this before, but let me just say it again. I really think if this market is going to collapse, it's going to be on the backs of those financials again. Come on, how many times can we hear about Greece and Greece being bailed out and Spain and on and on and on? It's always about the banks. It's not about really anything else. Yeah, you know, we do have the economy. We do have manufacturing and slowdowns here and whatever it might be. But the real backbreaker here seems to continue to be that financial system. I just think it's going to be the one that buries the markets. It's going to be the one that really is the, it's going to be 2008 or whatever. Again, that type of thing. I struggle with anything else being the more major catalyst. Yes, I see manufacturing and all the other little data, joblessness, you bet, job numbers, all of that adds to it. But I think it comes back to that financial system again. So this is a good one to follow. This is a good one to track. Below 85. Like this thing back below 85. Look how we came back into this line and stopped right there. Don't you love how these lines work? If you know how to draw your lines, you get them in the right spot, they're like magic for your trading. It's stupid crazy how well these things can work if you get them in the right spot. So here we go. Came right back to 85, stopped perfectly. We get a break back below here. I don't know, 78, 200-day moving average, go figure. Very possible. At least good enough for another trade. So if you can get back below 85, I'd be looking for that. I don't know if you can make $7 off it. That'd be great. But a buck or two at least, I would think you'd be able to slide in. So watch that below 85. Might take a couple tries. This thing might break and come back up, or break and come back up, whatever. So it might take a couple tries, but this is definitely worth it back below 85. FAZ in a beautiful channel to the upside here on the 60-minute. You can see that it just continues to run itself up. Looks good in through here too. The volume's good. Everything looks very nice. It is getting a little bit tired, but I'd still stick with it. Remember when I mentioned back here how a break of this channel was huge? How we've held this thing for eons? And now this break down here and the hold down here was big for the bulls. Well, guess what? Look what it's done since then. It's been huge for the bulls. Since we broke about $3 back, we're straight up. So it's worked very well. I do like this thing back above about, I think that 25.50 to 26 mark, and then the 27 to 27.50 mark is your next entry above that. This thing, if it gets going, guys, I'm telling you, markets keep collapsing. This thing has a lot of potential ahead of it. So we are getting a little bit extended. I would kind of like to see a pullback, but if you want to jump in, if you want to day trade it and get out by the end of the day, or whatever you want to do with it, it's really up to you. It's your money. I'd just say, you know, use your best risk management on this thing, but I still like it above 25.50, 26, 27, and 27.50. Those are my next big areas for you to watch on FAZ, or FAZ for you Canadians. Okay, that'll do it, guys. Wrap it up for today. Okay, so you like these? The subscription, the newsletters are fantastic. You'll like them even more. A lot more lines, a lot more discussion about where to get in, when to get in. Stocks, I put individual stocks on there. Just a lot more information in those subscribers things. Oops, sorry about that. And $28 a month, guys, like $1 a day. So I know that, you know, some of you might be really struggling right now with finances and whatnot, as the rest of the world seems to be. But at $1 a day, if you're actually trading an account, if you're putting real money on the table, It is a wonderful resource for you to refer to, and it's out every day except for Saturdays. So you get an idea of what to look for coming into the following days. Whether or not you take the advice is completely up to you, but at least it's there for you to take and chew on and then do your own analysis on. But there's a lot more information in that newsletter, well worth the money that you'll spend to help protect the capital that you already have. The next best way to do that is the mentoring as well. If you have money in the market and a small account, a large account, whatever it might be, I'll be quite honest, if you have a really large account, and I'm talking about, I don't know, 40, 50 or more in your account, the mentoring side of things is a no-brainer. You can't drive a car without insurance for your car. You don't want to buy a house without insurance for your house in case it starts on fire. I don't know why people don't invest in insurance for their trading accounts. And one of the best insurance premiums that you can pay would go towards education. Just getting not just any education, but the right education and how to protect the capital that you have. The mentoring course will do that. So the cost of the course will pay for itself over and over and over again, especially if you have a large account. If you don't know when to get in or where to get out, if you're struggling with that, I can fix that. If you're hesitant, I think that's the place to get in, and then you can't pull the trigger, I can help fix that. If you're bleeding money and you don't know how to stop the bleeding, you just can't seem to get on the right side of the trade, let me help you fix that. All of these things are what most people struggle with in their daily trading lives. And most of them they can be fixed. They're not always easy to fix. I wouldn't lie to you and tell you that, but they can be fixed. And you can read all the books you want. You can scour the internet as much as you want, but you won't find the information in the books or on the internet that's contained in my course. It's not out there. I've been told this by numerous students who are very due diligent in their homework, and they've told me it's just not out there. What I'm learning in this course does not exist anyplace else. So I know I can help you fix some of the problems that you're having. If you have larger accounts, the mentoring fee to take the course is you're doing nothing more than buying insurance to help protect the capital you already have. And if you're bleeding it away right now and you can't seem to figure out how to stop it, then the mentoring is for you. Can't go wrong with an education. If you get into it, we're into it 3, 4, 5 sessions, and you're like, Brian, listen, this is not helping me. I don't see how this is going to help me. Fine. You get all of your money back. You get to keep the education that you've already received up to that point, and we just move on with life. I'm sorry I wasted your time. So there's no risk to you. It's basically no obligation. Give it a shot. See what you think. If you decide to continue, great. And if you don't, that's fine. But I really think once you're into the course, once you're seeing what it entails, the fact that we're working one-on-one, there's nobody else in the room, you can ask questions, you can work on your own time, 7 o'clock at night, 9 o'clock at night, 7 a.m. on a Saturday morning, I don't care. We work around your schedule. I think you'll find that it's very, very useful to you. So call me, write me about that, let me know if you're interested. I'd be more than happy to hook you up with more information on that and get you started. Coming into the middle of May, I'm ready. Yep, I'm going to pick up a couple new students and get ready for the end of May and into June. All right, guys, we'll talk to you again on Thursday. See you then. Bye.